We are going to do goodwill valuation. It has three methods: average profit method, super profit method, and capitalized method. So one by one we will take a question and we will then understand what is these methods are. So first method we are taking question number 13. The value of goodwill on the basis of 4 years purchase. Means you have to 4 years purchase. 4 years purchase. 4 years purchase means, I will tell you later on, purchase of the average profit of average profit. First method we are using. So here 5 of the average profit of 5 years. So naturally 5 years profit is given 2015, 2016, 2017, 2018 and 2019. So to find the average profit, first you have to do the total. Okay, this total you have to do. Then to find the average of 5 years. So average equal to 2, 6, 0, 1, 2, 3, and here 5 numbers are there, 1, 2, 3, 4, 5. So it will be divided by 5. Okay. So this is average profit. So average profit you have arrived. Now it is 4 years purchase, means they are saying this average profit is to be multiplied by 4 years. So goodwill equal to 5 years purchase, 52,000 into 4 years. So this is 5 years average and 4 years purchase. So 4 year purchase means you have to multiply the average profit by 4. So this is goodwill of the firm. Goodwill of firm on the basis of average profit method. Okay. Now here I want to make you one clear thing. When average profit method you are using and on any year, suppose in this year any abnormal loss, fire rupees 10,000. So any abnormal loss is there, or suppose here sale of old machine profit 5,000. Okay. So if any abnormal things are there, you have to readjust the profit. Means if fire has occurred in this year, it means the actual profit would have been what? Actual profit would have been 50,000. So you have to take 50,000. Like here, due to machine, every year your machine, this is abnormal profit. So you have to reduce it to 55,000. Okay. And then you have to make the total. So 10 will go out and 5 will come. So 255. 255 will be your total. And this 255, then you have to 255 divided by 5. So this will be the goodwill. This will be the average profit. This will be then the average profit, because this you have to adjust. And then again 4 years purchase. So this is firm's goodwill. Okay. This is your average profit method. Now we are going to the next question. Now question number 40. Firm's capital in a business is 2 lakhs. So their firm's capital is 2 lakhs. Okay, now we are going to super profit. Second method we are going to tell. normal rate of return of the firm. Normal rate of return is 50%. It means normal rate of return means if any other firm they are working, so they are normally earning 15%. Normally rate of return on capital. Return means return on capital. So other firms who are in the market, so they are earning 15% of their capital. It means if we take our profit as a normal, so our normal profit will be equal to 30,000. Our profit will be 30,000. Okay, means 15% of 2 lakhs. The firm earned a profit, but our profit is given as 48,000 in the question, and goodwill 3 years purchase. So here you see normally a firm who is investing 2 lakhs rupees, they are getting 15% return. It means 30,000 rupees they are earning, whereas our profit, our firm is earning 48. So what is the super profit? Super profit means what extra you are earning. So super profit will be equal to 48,000 minus 30,000 means 18,000 extra you are earning. So at the rate of 15% we will come to the figure. So 15% is equal to 18,000. 15,000 equal to 30,000. Sorry, 15% equal to 30,000. Sorry, 15% equal to that. So 100%. So our super profit is this one. As per question, this super profits 3 years purchase. 3 years purchase. 3 years purchase of super profit means 3 into 18,000 means 54,000 is the goodwill of firm. Goodwill of firm. Goodwill of firm will be 54,000 based on this super profit method. We have calculated super profit and then the purchase, how much purchase years are given, you will multiply with that and the firm's profit will come. Okay, now we will go to the next question. Question number 16. Question number 16. Rajan and Rajni are partners in a firm. Their capitals were Rajan, his capital is 3 lakhs. And Rajni, his capital is 2 lakhs. So how much capital is there? Now we are talking about the third one. Third method we are telling. So 5 lakh is the capital of firm. Capital of firm. Capital of firm is 5 lakhs. Okay. During the year 2015, the firm earned a profit of a profit of 1,50,000. Okay. Calculate the value of goodwill by capitalized method, assuming that normal rate of return. Normal rate of return at the rate 20%. Normal rate of return means other firms who are working, they are earning 20%. It means rupees, if we will earn 20% of 5 lakhs. So normal rate 20% of 5 lakhs is equal to 1 lakh. So here you see we are earning 150, whereas our capital is earning 1 lakh. Other normal rate of return is 1 lakh. It means something extra we are earning. So now we will find out what is the value of our capital should be, because we are earning more. So how we will calculate? We will calculate 20% equal to 1 lakh. So 100% equal to 100% will be equal to here our firm is earning 150. So we will write 20, because normal rate of return is 20%. So for 20% we are earning 150. So if 100%, so 150 into 100 upon 20, so equal to, it will cut by 5 and 7,50,000. So our capitalized value, our capitalized value is 7,50,000, whereas we have invested only 5 lakhs. It means this extra amount is our goodwill. Without investing anything, we are earning profits. So that is our name and in the market. So goodwill will be equal to goodwill will be equal to capitalized value minus minus capital. So capitalized value is 7,50,000 and capital value is 5 lakhs. So your goodwill of the firm is 2,50,000. This is the goodwill of the firm. Okay. So this is your third method is over. Now we will go to the next question. A business has earned average profit earned 1 lakhs. Okay. Last few years. Find out the value of goodwill by capitalized method, given that the assets of the business assets of the business are 10 lakhs. Assets of the business are 10 lakhs. And external liability liabilities are 1,80,000. It means capital is always equal to assets. Capital equal to assets minus external liabilities. Okay. So your asset is 10 lakhs, 180 will go out. So what will remain? 8,20,000 will remain. This is your capital of the firm. This much is coming. 1 lakh. The normal rate of return is find out the value of goodwill by capitalized method. So average profit this one, and normal rate of return in the question given 10%. So it means when 10% is there, when 10% is equal to your 1 lakh. So 100%, 10% is equal to 1 lakh. 100% will be equal to 100 into 100 upon 10. 100 upon this figure will go down. So it will become 10. This is capitalized value. This is your capitalized value. Means capitalized value. It means whatever you are earning, that is equivalent to 10 lakhs rupees, whereas you have invested only 8,20,000 rupees. So the difference is your goodwill, name and fame in the market. So goodwill will be equal to the capitalized value minus capital, means 10 lakhs minus 820 is equal to 1,80,000 rupees. This is your answer. So this is your capitalized value. Okay, here only thing was that asset and liabilities was given, capital was not given. So capital you have calculated and find out. Then you have started when this portion was extra. This portion was extra, otherwise the average profit, normal rate of return and capital is given. You could have gone directly also. Now, here onwards, journal entries we will discuss. Verma and Sharma are partners in a firm. Profit and losses in the ratio. Verma and Sharma are there, and their profit ratio is 5:3. 5:3 means 5/8 and 3/8. Okay. And Ghosh, they admitted Ghosh for 1/5. 1/5 here. Sharma will come for 1/5 here. Sharma brings capital. He brings capital 20,000 and goodwill, his goodwill. So his share of goodwill, how much he brought? Goodwill, firm's goodwill, when we will calculate out of that, the new partner's share will be taken out, and here it is written. So in the question it is already given 4,000. So goodwill is this one. You have to give journal entries first. When the amount of goodwill is retained in the business. So before going, when the good retained in the business, when the amount of goodwill is fully withdrawn. Well, because goodwill is always shared on the basis of sacrifice. So you have to find out first sacrifice. So for that first we will find the new ratio. So in questions where it is not given, G is taking his share from whom? So if it is not given, your sacrifice ratio, so sacrifice ratio. Okay. So when in the question it is not given, new partner is acquiring his share from whom? So sacrifice ratio will always be there, old partners they are existing. So here their sacrifice ratio will be 5:3. We need not to go into calculation. Otherwise, if you want to do the calculation, you first convert them in the new PSR, and then you new PSR. You reduce old ratio from the new and sacrifice. What I have told in the previous video, as per that you have to calculate sacrifice. So here it will be automatically 5:3 because in the question it is not given from whom. This you can write in the question as it is not given, G is acquiring from whom. So their old ratio, old PSR will be their sacrifice. One line you can write. Now question number A. Question number A, when the amount of goodwill is retained in the business. So when this money is coming, so bank account debit. So first is when the amount of goodwill is retained in the business. So first entry will be bank account debit. Bank account debit to G's capital account. Because he will give capital, G's capital account. G's capital account will be 20,000 and to premium for goodwill account. Premium for goodwill account. Now in future I will write PFG. Okay, PFG means premium for goodwill. Shortcut, but so that our speed will be more. 4,000. And this becomes 24,000. Okay, and narration you have to give. Now this goodwill will be shared by the existing partners, means PFG debit 4 lakhs to V's capital and to S capital. As this like this you have to write full. So 5:3 means 8. So we will divide 4,000 into 5/8. 8 25, 2,500 and 1,500. This is their share. Now the question is, when the amount of goodwill is retained in the business. So if this is there, it is retained in the business, because the goodwill amount has gone to the new partner's capital account, and capital account nothing you are touching, so it is retained in the business. So one portion is over. Okay, now we are going to B part. It's B part. It's B part. B part. When the amount of goodwill is fully withdrawn. So in the previous one, the goodwill has been credited to partner's capital account. Now they want to withdraw it. So how they will withdraw? So V's capital account debit 2,500, full amount they are withdrawing, and S capital account debit 1,500 to bank account 4,000. So full amount is withdrawn. So this is over. See, when 50% of the goodwill is withdrawn, suppose 60% they want to withdraw. See, so what you will do? 50% you make it 1,250 and 7,500, 758. This is to 50% is withdrawn. So likewise, you can write the narration if 50% of the amount has been withdrawn. When goodwill is D, when privately paid means it is not recorded privately paid. So no journal entry, because it is privately paid. So no record will be there, nothing will be entered. Okay. A, B are partners sharing A and B. A and B are there, and their profit sharing ratio is 3:2, means 3/5 and 2/5. Their ratio is there. They bring C for 1/4 share. 1/4 share. C brings capital. He brings capital. C brings capital 30,000. And the requisite amount of goodwill premium in cash. And the goodwill they have not mentioned. Goodwill they are saying requisite goodwill, means his portion he is giving. So the goodwill of the firm. Now firm's goodwill. So how we will calculate? His goodwill will be equal to firm's goodwill. Firm's goodwill in previous questions we have calculated. Firm's goodwill into his share. His share means firm's goodwill is given, the firm's goodwill of the firm valued at 20,000. So 20,000 then 1/4 equal to 5,000. So how much he will give for goodwill? For goodwill he will give 5,000 rupees for goodwill. For goodwill he will give 5,000. Okay. Now give new profit, new PSR. New PSR is given. New PSR is 2:1:1, means 2/4, 1/4 and 1/4 A, B and C. Okay. So the new profit A and B withdraw their share of goodwill. So to divide this goodwill, you have to find the sacrifice ratio. So sacrifice ratio, how we will come? Sacrifice ratio is equal to old ratio minus new ratio. So old ratio was 3/5 of Mr. A, and new ratio of A 2/4. So it will become 20. LCM is 25. 4 3 is 12 minus 4 5 and 5 2 is 10, means 2/20. This is sacrifice. And B how much he has sacrificed? His old share was 2/5 minus new share 1/4 equal to 20. 5 4 is 20 and 4 2 is 8 minus 4 5 is. So 5 will come. This is 3/20. So this 20 we will leave, and their sacrifice ratio of A is to B is equal to 2:3. So goodwill will be divided in this ratio. Now the journal entry is give the necessary journal A and B. Question number 19. Okay, A and B withdraw their share of goodwill. So now first journal entry will be bank account debit to seize capital account and to premium for goodwill account. Okay, so this is your 30,000 and 5,000. So 35,000 has come. So this amount will go to A and B. So premium for goodwill account debit 5,000 to A and to B in sacrifice ratio, divided in sacrifice ratio. It is divided in 2:3. So A will get 2,000 and B will get 3,000. Now the question wants that they withdraw their share of goodwill, means this amount they are withdrawing. So A's capital to A's capital. So A's capital account debit, B's capital account debit to bank account, means money is withdrawn, and we will write whole money is withdrawn. Okay, so 5,000. So this is your journal entry as per sacrifice, how the goodwill is divided, and how the firm's when firm's goodwill is given, how his share is calculated. Okay.